Hello, my dear friends. My name is Mahmoud Kilani. I work with companies and investors operating in the Middle East, focusing on legal compliance, contracts, and risk prevention. Today, we will talk about the Middle East and North Africa investment risks every foreign investor must know. If you are thinking about investing in the Middle East and North Africa, pause for a second, because while Middle East and North Africa offers huge opportunities, fast growth, strategic markets, high returns, it also comes with risk that foreign investors often underestimate. And the biggest one is regulatory and legal blind spots. Today, I will break down the most common investment risks in the Middle East and North Africa, why projects stall or fail, and a simple step that can protect your capital before it's too late. Let's get into it. First, let's be fair. Middle East and North Africa is attractive for a reason. Rapid infrastructure development, government-backed projects, strategic access to Europe, Africa, and Asia, energy, real estate, fintech, logistics, and manufacturing growth. Countries across the region are actively courting foreign capital. But here is the problem. Many investors treat Middle East and North Africa like a copy-paste version of Western markets. And that assumption is where things start to break. The number one mistake foreign investors make in Middle East and North Africa is underestimating regulatory hurdles and local commercial law. What does that look like in real life? Projects delayed because licenses take longer than expected, contracts declared unenforceable due to local legal technicalities, ownership structures violating foreign investment laws, disputes stuck in unfamiliar court systems or arbitration rules, and suddenly capital is locked, timelines collapse, ROI disappears. Not because the business idea was bad, but because the legal groundwork wasn't done properly. So why this happens so often? Here's the question. And here's why even experienced investors get caught off guard. Number one, laws vary dramatically across Middle East and North Africa. There is no single Middle East and North Africa legal system. Each country has its own mix of civil law, Sharia-based principles, regulatory authorities, and wide discretion. Rules change fast. Investment laws, foreign ownership limits, and compliance rules evolve quickly, sometimes without long transition periods. Number three, what's written isn't always how it's applied. Practical enforcement matters just as much as legislation, and that requires local insight. So relying only on head office legal teams, generic international contracts, or what worked elsewhere is a high-risk move. The real cost of ignoring legal risk, let's be very clear about that. When investors skip proper legal preparation in Middle East and North Africa, the consequences are serious. Contracts voided or unenforceable, joint ventures turning into disputes, assets frozen during litigation, forced exits at a loss. And here is the painful part. These losses are preventable. Most failures don't come from market demand. They come from legal misalignment with local regulations. The simple step that changes everything is is actually the solution. So what is the solution? Conduct pre-investment legal audits and risk mapping. This means reviewing local commercial investment laws before committing capital, stress testing contracts under local jurisdiction, mapping regulatory licensing and compliance risks, structuring ownership and governance correctly from day one. Think of it this way: legal due diligence isn't a formality, it is profit protection. So to wrap all this up, if you are investing in Middle East and North Africa or planning to, remember this: understanding local commercial laws is not optional. It is not a cost, it's a strategy. The investors who win this in this region aren't the boldest, they are the best prepared. If this video helped you think differently about Middle East and North Africa investment risk, hit like, subscribe, and share it with someone considering the region. And let's remember that smart capital moves first with knowledge. Thank you for watching and see you next time.